Alright, bet. Today is the 18th of August, being a Tuesday, and in relation to the economic calendar, we had no high impact news today. So, simply just going to be going over this trade very briefly. It's going to be a different format to what I've been doing recently. But, yeah, took this trade during the New York AM session. Overall, was looking to frame a 10 a.m. power of 3. So framing a 10 a.m. power of 3, and we're looking for that buy side deliverance. All of this buy side right here looks, rather appealing in terms of drawing towards for price action, especially this high right here being the opening range high. But to be quite honest, I'm not quite sure if we are going to deliver all the way up here, which is why I ended up managing the trade the way I did, because I did not see what I wanted to see. So jumping straight into the analysis, taking a look at the daily, there really wasn't much that I was paying attention to on the daily. If I'm to go on a little tangent, if this daily candle closes underneath this candle right here, that's going to be your formation of an order block, with the knowledge in mind as well that we have a cracking correlation right here. It can invite for that sell side delivery, but this day has to close first. In relation to the daily, there really wasn't anything that I was paying attention to other than this low right here. So this low would have been your previous week low. Yeah, so that would have been your previous week low. That was what I was monitoring, but that is apparent across all time frames. And then when we jump onto the 4 hour, would have been this body standard deviation. So you have these series of up close candles, series of down close candles, and anchoring a standard deviation to the body. We have that -2, -2.5, aligning with this low right here, which would have been your Tuesday low of the week. I was also taking an acknowledgement to the fact that, okay, we've had very heavy sell side deliverance. So well and truly that sell side deliverance began heavy during today's trading. So 1800 opens and we just continue delivering down. We just dump from the Asia session. And normally when this happens, for one, it's going to invite for unpleasant conditions for the New York AM session, especially if London continues that sell side delivery motion that Asia would have started. So Asia started an expansion towards sell side. London continues that expansion. It's simply just going to lead for the New York AM session to be rather chaotic in a sense. And then taking a look at the 1 hour time frame, wasn't really much I was paying attention to on the 1 hour time frame. Same thing, heavy deliverance down towards sell side. We have the 1800 opening coming in right here. We see Asia forms that high and we just dump. We straight up deliver. Didn't even bother grabbing a Asia standard deviation projection because it's exhausted. And when you're seeing standard deviations being exhausted like this, for example, we have this standard deviation, you have this Asia standard deviation. When they're being exhausted, it's anchored to a 1 hour time frame. If it's being exhausted, price is just blowing past it as if it doesn't exist. It ultimately means one thing: higher time frame standard deviations are being adhered to, because there is a hierarchy when it comes to time in terms of if the 1 hour is telling us something, but the 4 hour is telling us something else, saying that, okay, this is where the move is projected for, the 1 hour holds no weight over whatever the 4 hour time frame is saying. That is the logic behind the hierarchy. And then on the 15 minute, this is where a lot of the analysis was done. I say a lot, but there's really nothing that is annotated, simply just the previous week low. So previous week low, I was just looking at it to serve as a point of inception once it had been engaged with. Now with NQ was the lagging asset. So ES had ended up engaging with that previous week low before NQ had. So ES ended up engaging with it. I'm pretty sure maybe Monday's trading or early Tuesday trading. Nasdaq was failing to follow suit. It was simply lagging behind. And this expansion was in order to catch up with what ES had done. And then taking a look at the 5 minute, this is where a majority of the analysis was done for this session. And as it stands right now, it does appear that we are having that deliverance up towards buy side. And I will state as to why I managed the trade the way I did. But we have that 9:30 opening coming in right here and immediately whipsaw candle off that 9:30 opening. As we know, whipsaw candles being one of my favorite types of setups when they present themselves. If you're aligning yourself with that order flow in terms of where the market wants to go based on higher time frames, in this case we have 9:30 being a whipsaw candle. We end up seeing 940 engaging with the whipsaw candle high. This is aligning with the ultimate objective of the market being seeking that previous week low. So if I'm to just grab the previous week low, we can see that the previous week low comes in somewhere around here. So aligning yourself with this deliverance towards that previous week low would be very nice, but there wasn't really much solid framework within this segment of price action that I found valid enough to adhere to. So we end up delivering down towards this previous week low. There was a standard deviation that was here, your pre-New York AM standard deviation projecting for sell side. So we have that previous week low and we end up engaging with it. And I have this standard deviation here because I wanted to see a change in staying delivery. So I wanted to see a change in staying delivery present itself here, but we didn't end up having that. So on this candle, 11:15, it closes bearish, ruining the sequence. To be quite honest, I was not a fan of that. As well as on the 1 minute time frame, we didn't have a clean change in staying delivery. The only time frame that offered one would have been the 15-second. Now, with the idea in mind that we are framing a 10 a.m. power of 3, 10 a.m. opens right here, we don't form a sufficient high for 10 a.m. 10 a.m. simply delivers up above the equilibrium of this respective range. So from this candle's high all the way down to this candle's low, that would be a respective range. 10 a.m. opens, delivers above the equilibrium, but it's still not a sufficient high for aligning our time frames. Jumping onto 15 minute, 10 a.m. being your 4-hour candle opening, there's no 15-minute PD array that we can say 10 a.m. engaged with that is efficient enough for us to say that is the high of 10 a.m. and we are going to continue going down. So 10 a.m. opens, we deliver to the pre-New York AM standard deviation right to the -4 level, and then we retrace back into the range, engaging with that 9:30 opening, and then we have that deliverance down to engage with that previous week low. So within this segment of price action, there would have been a 1 minute standard deviation projecting for sell side, and it was, well, basically where that point of inception established itself for that buy side delivery. So if we drop down onto the 1 minute time frame, this would have been the standard deviation. So we have 10 a.m. opening here, delivers above an equilibrium of this range, then delivers down, engaging with that 5 minute pre-New York AM standard deviation, and then we deliver back up, engage with that 9:30 opening, and from this segment of price action, standard deviation projected out in price. So you have that -4, -4.5. This is where that point of inception was located for that buy side delivery. Now, while paying attention to this 1 minute time frame, we can see that the first presented fair value gap for the AM session, very large. Very large fair value gap. And normally when this occurs, if you're anticipating for poor conditions for the New York AM session, this is a warning sign. That whipsaw candle that we seen on the 15 minute and the 5 minute, again, another warning sign. It's simply just inviting for unpleasant conditions, a lot of back and forth price action. Now, another thing that made me inclined to seek that buy side delivery is, okay, we have that 1800 opening, and then we also have the midnight opening within this segment of price action right here. And then the last thing would have been the previous settlement. So we have the previous settlement opening in alignment with the current 1800. So 1800 for today, and then we have that previous settlement. The orange lines would be that opening range gap, so it layered out in quadrants. If we jump onto the regular trading hours, very, very large gap. We're framing a 10 a.m. power of 3, and we're looking at this to potentially be the low of the day, framing that daily power of 3. Am I still confident in terms of it being the low of the day for today's trading? Not quite sure, to be honest, because we didn't have this clean change in state delivery. If we have a 15-minute change in state, that would be nice. We can have it in the form of a inversion fair value gap and potentially a change in state delivery in the formation of your order block as well. But yeah, jumping on to the actual execution. So I ended up executing on the M&Q contract by accident because I was adjusting my position size on Trade and left it on the M&Q contract. The reason why I was adjusting was because rather volatile. So I was looking at price action and saying, okay, if a valid position presented itself on the M1, it's going to require, for example, let's say if I was to execute off of this right here, valid stop loss requiring 64 points, the next valid 50 points. So I was simply just getting ready to half my size. Now, in relation to this execution, well and truly could have executed on the NQ contract, but I simply just added into the position again once I realized I was on the MNQ contract. So just checking if there's any annotations on the NQ contract. There's none other than the fact that I was watching this low. So back onto the MNQ contract, we have a Kraken correlation that established itself here in price. And once this Kraken correlation ended up establishing itself in price, ES ended up following suit and engaging with this low. So for it to jump back onto this chart, and we are looking at ES being the top left chart, this 1101 low, we end up seeing it engaged on NASDAQ at 1110. ES fails to follow suit, but ES moves rather lethargically. It's not following suit with that buy side delivery and ends up engaging with that 1101 low. And that is something that I did not like while I was in the trade as well, in terms of, okay, that's not really something that I would like to see. Yes, it is offering a second stage Kraken correlation, but ideally, I would not like it to see engage the 1101 low. So in relation to what we executed off of, it would have been off of a 15-second inversion fair value gap. So we have the first one being right here, and then the second one, and this is when I just added into the position again after realizing I was on the MNQ contract. And then where I look to scale out would have been the equilibrium of the range that we were delivering back into. So like I mentioned, on the M1, I was looking to see this be a change in sustained delivery. So these two down close candles, I was looking for a series of up close candles to close above it, and that would have made me very, confident in the trade in terms of, okay, we are more than likely going to see the opening range high, potentially even the pre-New York AM high, as well as these internal buy side liquidities, as well as that 10 a.m. opening as well. These were all draws on liquidity, multiple draws on liquidity at buy side. But we did not end up having the change in sustained delivery in the formation of an order block. We just have the inversion for a value gap. So we end up delivering into the inversion again, very deep again. I'm gauging order flow as I am in the trade. I don't like to see a very deep retracement into the inversion. We close below the consequent encroachment. That to me is an indication that this trade may not deliver in the manner I was anticipating for it to deliver, or to where I am anticipating for it to deliver. So on the 15 second, I deemed this a clean change in sustained delivery in terms of we had the inversions of these fair value gaps that engaged with sell side, and price action utilized them in a very efficient manner, anchoring a standard deviation from this candle's low all the way up to this candle's high, -2, -2.5, projecting for this pool of buy side, which would have been a M15 SIBI low, and then the -4, -4.5, projecting just above the equilibrium of the range. So from this candle's high all the way down to this candle's low, equilibrium OTE coming in right here, -4, -4.5, projecting just above it. So while I was in the trade, I was conscious of the fact that, okay, we could engage with this pool of buy side being your 15-minute SIBI low and end up just reversing, as that -2, -2.5, as we know, may serve as a point of reaccumulation, redistribution, or a smart money reversal. But I liked the deliverance to engage with that buy side. So we end up seeing price action delivering up, delivering back down inside of this inversion for a value gap right here. So engaging with that inversion for a value gap, and then we have a closure above this down close candle. This down close candle you can deem an order block. We end up seeing this candle right here, utilizing it efficiently and displacing towards buy side. So if price action was to adhere to the 15-minute SIBI, it would mean that a change in sustained delivery is required for sell side, which would mean that a series of down close candles would have to close below these series of up close candles. This is the ideology I sometimes refer to in terms of when I'm engaging with price action. It's essentially a one-player game of chess. Okay, I see that this buy side may serve as a point of inception. If I wanted to utilize that as a point of inception for sell side, what would I have to see in order for it to be valid? And that is also a way in terms of how one could look to manage their stop loss, because now this low becomes a point of invalidation, as well as the fact that a Kraken correlation established itself here. But this low becomes a point of invalidation, as well as this order block being a shield, as well as this inversion being a point of defense because price action never actually closed above it during this run up. Again, another thing I did not like while I was in the trade, but stop loss was simply just managed to this low, essentially just break even just above it and simply just look to see that deliverance into the equilibrium of the range. And then these two lines right here being 0.5, 0.33 was when I was speculating on adding into my position, but I wasn't seeing the signatures I wanted to see to give me the confidence in order to add into my position. You can also see that point of inception establishing itself within that 30-minute window. And yeah, that is basically it for the trade. You can see that price action is now delivered into that 10 a.m. opening, which is very nice. Trying to think if there is anything that I'm missing. In relation to a pre-session outlook, I didn't even get one done because I was rather busy ahead of the AM session, but I already knew what I had in mind in terms of, okay, I looked at the markets and we just had heavy sell side deliverance. Whenever I see this, I'm looking for a way to go against it. I'm waiting for the opportunity to go against it. That is the entire premise of the Inception model, is to go against the current state of order flow when the time is right. Now, of course, there's always a continuation model, but there is no valid continuation when we're viewing this leg down towards sell side. But yeah, that would be it for the trade analysis.